Welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we cover the notable moves across financial markets in 20 minutes or less. Make sure you are subscribed to our YouTube channel. Hit those notifications so you never miss an episode, so you're always prepared for the week ahead. And these are weeks you don't want to miss. It was another trading week for the history books. Some absolute monster moves out there in stocks, in bonds, in currencies. Let's get right into it here. Hope you survived, you're through. Deep breaths, here we go. Big move, of course, was fueling from what seemingly was a spontaneous tweet from President Trump, issuing a 90-day pause on all tariffs except for China. And of course, China is the big lingering elephant in the room here that we need to grapple with and this market is going to be concerned about. But this 90-day pause basically created a huge sigh of relief for the markets. We had one of the biggest, quickest moves, especially if you're looking at like dollar volume or notional volume traded and just increase in market cap. The S&P 500 basically went up 8% from the announcement of the pause to the close of the session. S&P 500 up 8%. I mean, it's just an absolute monster move. And as you can imagine, most individual stocks were up 15, 20% off of that move. Now, not everything is good and rosy here. So, of course, the big elephant in the room, again, is China. And figuring out how we're going to come to terms with some type of agreement there is something the market now needs to deal with. But the concerning part is we saw Treasury yields accelerate to the upside. Not just go up, but they accelerated higher. The 10-year Treasury yield starting the week less than 4%, closed the week at just under 4.5%. One of the largest, fastest moves we've seen in the bond market ever. Meanwhile, you had the dollar index, which is usually positively correlated with Treasury yields, fly in the exact opposite direction. We saw the dollar index down some 2.5–3% on the week. So you had this very unusual, stressful move for the plumbing of the market, which is concerning, right? Last week, when we talked about this type of sell-off and the volatility environment where it was, we talked about this is where things start to break. And I think this is an indication of where things are breaking, right? The bond market, there's a lot of attention right now this week on this basis trade. That is a very popular trade that hedge funds have been levering up. And that trade is unwinding right now. And that could be the sole cause of yields rising so much. But it's concerning, and it's especially going to be concerning or certainly aggravating for an administration that has basically said in no uncertain terms their one goal is to get the 10-year Treasury yield down. And seemingly this week, everything was undone and then some on their progress of getting yields down. So this is going to be, I think, the two key elements we need to pay attention to going forward. It's going to be this trade deal relationship with China, and it's going to be yields going forward, right? We're starting earnings season. Banks kicked off earnings season on Friday. I don't know how much that's actually going to matter this year or this quarter. Maybe this, hopefully not this year, but this quarter, because every company basically has an excuse to punt or just cite uncertainty across these tariffs and input costs and, right down the list. So I don't know how much the guidance and all of that is really going to matter at this point. I think it's going to be a lot of this relationship and yields and the stability of the financial system at this point in time. So that's some of what went on this week. We're going to talk all about it. Before we get into it, though, I do want to highlight once again our friends over at Investors Business Daily. They are a sponsor of this show. This is a webinar that they're doing tomorrow, depending on when you're watching this. It's going to be Saturday, April 12th. You can sign up. It is a paid course, but it is a seminar that's going on short selling. We might be in this rough market environment for quite some time, so do check it out. I'm going to put links in the description of this video, and you can equip yourself with some new tools and strategies and read more about what is involved in this workshop this Saturday, April 12th, Investors Business Daily. Shout out to them for sponsoring the show. And now let's get into it. All right, here we go. We've got some charts in front of us. Warden TC2000, that's a charting platform we're using throughout this video. It's a platform we support here at the Trade Risk. We've got lots of cool things built for it, including lots of the dashboards indicators you're going to see throughout this presentation. So check out our website, thetraderisk.com. We've even got a referral link in the description as well for TC2000. Might be a discount code on there for you new users, so check that out with a link in the description of this video. Let's get into the numbers here. You can see we were bright red last week, almost 9-10% down across the board. And here we go, 4-5-7% bounce back. Not so much for the Russell 2000, only up 2%. Take a look at volatility. It is actually down 7 points this week. We're going into this weekend now at a rosy 37.56 here for the VIX, which basically implies a 3% move, 2.5%, 3% move, I believe, across, if my math is correct, day-to-day movement in the S&P 500, right? So just again, if you're a new investor grappling with this volatility for the first time, you should expect that the S&P 500 is going to be moving 2 to 3% per day, right? That's what a VIX at 37 implies. Now, if we take a look here at our sectors, you can see again, technology was the springboard back here. Most sectors were in the green, 8% higher for tech. Industrials up 6.5%, financials up 5.5%. They started reporting earnings. Everything again was green except for real estate, which is certainly feeling it on those rates sharply moving higher this week. Now, if we take a look at our sector trends, again, we're not going to really see too much here. Most things are still pretty damaged despite this week's rebound. This trend filter is going to take some time, but this is a custom indicator we have available for TC2000 and TradingView users on our website. Now, if we take a look at market breadth here, we did talk a lot about this last week. We showed some different views of how oversold and kind of historically bad sentiment was last week's video, right? We were noting the washout values that we saw here. We talked very clearly about the fact that there was capitulation and fear in this market, and it was time to start the watch list, the buying list, the levels at which you want to own stocks. And of course, now we saw the big snapback. So hopefully you were prepared. Hopefully you had that list ready to go. After this week, you can see, of course, there weren't too many stocks hitting 52-week lows because we saw such a strong rebound. Again, I think we just need to give this some more time. I'm not going to go too much further into it because it's not going to tell us too much. Again, if we look at our 1-month lows washout that we talked about last week as well, those were at historic kind of capitulation levels, and they dried up, of course. We're not getting a big flurry of stocks hitting 1-month highs even at this point. It's going to take more time. The one thing that is clear is that those oversold conditions that we had, they're no longer present, right? Those extreme nosebleed kind of sell-off readings, the despair in the market, that's not there anymore. We've got the rebound. We've got that technical rebound, whether that's long-term capital or short-term traders. Nonetheless, we're not at depressed panic levels anymore. That makes things much more difficult now to forecast looking ahead. It creates different sets of opportunities, which we're going to look at, but we no longer have that big panic oversold conditions, okay? Let's take a quick look here at our macro slide. Dollar index completely kind of poleaxe this week, down almost 3%. Huge move for the dollar. And again, if you look at the 10-year Treasury, look at this here, right? We had this nice pattern. We had this rollover. We had this head and shoulders kind of top. We were going to roll over and go down to basically a 3.5% 10-year Treasury yield. That was the nice, neat, orderly plan. Administration gets their way, and that totally unraveled this week, right? We had the initial move down to start the week, and then just an absolute V bottom up, and one of the biggest moves higher here for 10-year Treasury yields. And now you can see we are breaking this downtrend line and starting our ascent higher here. This is a problem. I think full stop. The 10-year Treasury yield, if this continues to rise and suddenly we're talking about 5% or even anything north of 4.5%, I think is going to be a problem here. And the administration is probably going to get creative. And maybe it means liquidity. Maybe it means the forced hand of the Fed or some type of creative liquidity injection to try and get this down, yield curve control, whatever it is, it might happen if we continue to see this accelerate here. So far, the equity market is kind of shrugging things off, right? We had that nice rebound this week, even in the face of sharply higher interest rates right now. So that relationship, though, doesn't feel like it could persist for a meaningful period of time. Something has to give. Pay attention to the 10-year Treasury yield and the dollar index to a lesser extent. Now, if we take a look at commodities here, silver, gold, just absolute monster moves here, 6 and 7% back up. Gold, new record highs. Bitcoin flat on the week. Oil down on the week. Let's get into some charts here. So here's the S&P 500. Here's the weekly chart. First thing you got to just draw your attention to is zoom all the way out. I can go back to 1997 on this chart right here. This is a weekly time frame. This is S&P 500. This is dollar volume, and take a look at the $492 billion, which maybe is not even a settled number at this point. $500 billion traded here in the SPY ETF. That is an epic amount of volume. That is the largest week of volume ever recorded here for the SPY. It's dollar volume. Again, there's a lot more dollars now than there were in 1990. I get it, but still, it was a monstrous week here for volume. And, ordinarily here, I mean, this type of stat, this type of range, this type of V-shaped recovery would pretty much signal to me with some pretty high degree of confidence that that was the low. The low is in, right? Full stop. But it is tricky, right? And it is going to be a hard situation here because there are still uncertainties that are lingering here. Not everything is resolved. I think we got a lot of the risk perhaps removed with that 90-day pause. But again, we still have an unstable fixed income market right now, and we have negotiations still underway for China. So those things are going to keep a lid, I think, on the S&P getting too comfortable rising too fast. But nonetheless, here we go. This was this week's trading range. If we take a look here at Monday's action, we did stick a bit of a low here on Monday, right? We had a gap down on the overnight Sunday night futures, and we did probe lower here, and we kind of immediately put in that low right at the open on Monday. We had a very wide range day. We had a wick all the way up to 522 with some fake headline or some misreported headline already, feels like 10 years ago. But there was a pretty controversial sort of headline that hit that caused the market to rally, and then on a tariff pause, and then it kind of got reset again. We had another wide range session on Tuesday. We had this nice 3% gap up to start the session, and then they basically gave it all back. And then, of course, Wednesday was the big historic day. This is the day that President Trump comes out on Truth Social and says 90-day pause. Apparently, this is the real headline, and off we go to the races. And of course, it couldn't be too easy. We had to come down on Thursday. We did reset and retrace a lot of that gap, or a lot of that move. We retraced almost 2/3 of it on Thursday. So if you missed the move Wednesday, you kind of had a second chance to get back in at almost those prices. And then Friday, we did follow through higher. So all is to say, let's take a look at this weekly chart. We moved up 5.67%. We reset oversold conditions. Sentiment was absolutely in the gutters. VIX was north of 50. AI surveys, put call ratios, hedge fund positioning, hedge fund gross leverage, everything was down. Everything was showing that sentiment was in the dumps. We talked about having the list, the buy setups, the things that you want to own at lower prices, at panic capitulation prices. And we got that nice springboard higher. Now, here we go looking forward. I think it becomes just a lot more messy, murkier, and difficult to assess where we go from here. The problem right now is the range is just so huge, right? Because the biggest reference point that we can use right now as traders is down here at this week's lows, which is, call it 482 here in the SPY. That's not that helpful if I say, hey, okay, be long against 482 because, you're basically saying, okay, that's a 10% stop loss. That's really difficult to trade against. Those ranges are so wide right now. So you got to be a little bit careful here. I mean, the S&P seems like, right, in a true sense, it's in a sideways trading range that you could argue to up towards last week's range. So all the way up to here, which is basically 7 or 8% higher. And then you have a 10% down range. That's a wide band, right? And not too helpful in terms of how to gauge levels. So I think you do need to be a little bit careful, pick your spots and look for individual stocks, which I do want to spend some time talking about a little bit later in this video. If you go down to an intraday chart, I got a 65-minute chart here. You can see again, you could look at this reference point here around 511, which is essentially this intraday low that we made on Thursday. So you've got some reference there. We chopped around here back on the 4th as well. So there's kind of a pivot area around 511. And then you do have an open gap here that the market may want to go fill, right? May want to go fill up here around 550. The headline risk right now is, that the president suddenly just tweets, deal with China or some negotiation, or we're coming to terms, or we're getting close, right? The market is going to like that if we can start to put the tariff discussion, the tariff concerns behind us. If we can, come to those agreements, if we can get things behind us and the market can start to go forward looking on the actual economy and company earnings, then we're going to be in a much better spot. So we do have headline risk there out of China. And again, I do think that the yield in the 10-year is still very important to pay attention to right now. But as it stands here, the S&P 500 is still arguably in a downtrend. It's still making, kind of lower lows, lower highs. We've worked off those extreme oversold conditions. And this is where the real chop, the fight, the search for value, and the trading is going to occur here. I think it's a much more kind of short-term traders market here. And I think you got to pick your spots, know your levels. In the short term, there's momentum to the upside, but you just got to be careful. Not to overstay your welcome, because VIX at 37 again is implying basically a 2.5–3% move each and every day. So you want to see the VIX continue to compress. You want to see these ranges start to kind of compress a little bit, and you want to get some better levels to start working against than these super wide bands. So for me, it seems like there's some momentum to the upside right now. It seems like the market could climb a little bit of a wall of worry where people are not believing in this market, or still just say, you know what, I don't want to be involved in this market because it's so chaotic. And that does breed opportunity when you have people half out the door, that the market could float higher. But again, I say that with still plenty of risks out there to be aware of. If we look at the NASDAQ 100, I mean, we're pretty much going to have the same analysis. We have huge ranges here. We had a huge day on Wednesday. Pretty much everything tracks, massive volume trade. We ended up having basically a high to low intraday 25–26% correction in the NASDAQ 100. That's a pretty good amount of fear, right? Again, shopping lists ready, buyers stepping back in, getting some value. We reclaimed the April lows here from 24. We reclaimed the August lows here from 2024. We really reclaimed kind of the September pivot low as well. So there was a nice reset, a nice cleansing. Let's see if we can start to hold some levels, build some support, see buyers come in, get some of these issues resolved, and maybe off we can go. The VIX, I think, is another place we can start to pay attention to again. You usually see the VIX start to top out and head lower before that market low, right? So the fact that we were able to kind of close towards the range lows here at 37 going into the weekend is actually a mildly encouraging sign. What we want to see is follow through lower in the VIX. We want to get this to the low 30s. Be hard to probably sustain there immediately without some resolution on trade. But I think if we can get the VIX maybe down to 30, high 20s and stabilize there for a little bit, I think that's going to be about as good as we can get for some time. And then we can kind of take it day by day. So let's continue to see this hopefully roll back over. If we get a sudden spike, if we're talking north of 50 again, or we get a VIX breaking out, that's going to be really tough for the market to sustain higher prices if the volatility index continues up. If you zoom out here and you look at the VIX, I mean, it's very difficult to sustain over 30 for long periods of time. Back in COVID, we were here for basically 5 or so weeks before above 30, closing above 30. And then, of course, the financial crisis, we did spend multiple months, but that was a crisis that was unfolding over a longer stretch of time. And who knows, we could be in that type of environment again here. It does feel like volatility is going to stay at least elevated. May not be 50, but it seems like it's going to stay elevated for the time being here. So VIX, I think, is something we can watch. If we, again, take a look at Treasury yields, this is the 10-year Treasury bond IEF. You can see just the monster move that this thing saw. Again, you throw on weekly chart, look at the volume traded here. I mean, it was pretty historic on this move here. And again, going in the wrong direction while the dollar is going down as well, right? So usually you get yields up, dollar up. And this is, going in the opposite direction. This is the 10-year Treasury yield index moving back up towards our cycle high. So that's the other place we want to be watching. If we look at gold here, gold is the flight to safety, full stop. I mean, this is where dollars are flowing out of treasuries, maybe out of US dollars, and they're into a safe, neutral, quote unquote currency, and gold is still winning this, winning the rotation of dollars. It's up 23% this year. It's up 26% last year, and it's extremely overbought, but this is where money is going to flow in a panic. So there you go. So GLD continues to be a big beneficiary of capital right now. Oil is not, right? Oil is still struggling here. It was down 2.5%, 2.15% this week. Seems like, a decent spot for dip buyers, courageous dip buyers to kind of step back in. The other thing, of course, that the investors are going to be just thinking about is, well, certainly China, but also just a recession generally speaking. And, if we start to go into recessionary signals, then the demand for oil is certainly going to dry up. So oil, I think, is interesting. I mean, energy stocks, generally speaking, interesting as an opportunistic spot. But there's a lot of short-term technical damage here. So it's, kind of buyer beware. You do have to be very careful if you're going to be, kind of trekking into these areas. So that, I think, is the big lay of the land moves from this week. I do want to talk about just some of the individual stocks that we saw. We saw just a tremendous amount, but I've got a simple screen here that's just basically looking at large cap stocks making meaningful moves up or down, and I just want to run through them here. So let's take a quick peek. We're going to go through them fast. Newmont Corporation, so gold miner here, massive move, 25% up, huge volume coming in. Broadcom, right, semiconductor play. I think they had a big buyback that got issued this week as well. Semiconductors, one of the places I was fishing, still have the SMH position, and actually added to it this week as well. So semiconductors, nice rebound there. I am long, so that works. Constellation Energy, another place I was fishing, and I really should have pulled the trigger here at this 160s. I was actually trying to bid on this underneath this August low here. So I had bids around the low to mid 150s that never got filled. But this is one of the spots I wanted to get into. I couldn't. PLTR, so Palantir, this trend is still not going away. Nice bullish engulfing weekly bar, 20% up. GE, another power kind of utility play here. GE for Nova. Gold miner, NVIDIA, big bullish engulfing week here, right? Big volume, undercut kind of the August lows, nice, bullish engulfing bar up. CrowdStrike Holdings, right? Cybersecurity play. And I'm going to be here for a long time. So what I'm going to do is I'm going to expand this list, and I'm just going to show you right down here all the individual stocks that made some pretty meaningful moves, a lot of bullish engulfing moves, a lot of historic volume. So these can mark significant turning points here. Even if the S&P 500 kind of grinds lower, I think you got a lot of showings here that just had more relative strength, more, recapture of the range, and some more things that you could potentially fish from. I don't know that I own any of these outright that I need to mention. I don't think so. But it's certainly a good list to take a look at. Last but not least, if we take a look at where our trading systems are. So I've got some new dashboards I've been working on. I'm always tinkering here on different dashboards. This is our swing trading system, Lamerick. And this is going into the weekend. It finally got involved on Wednesday with some buying this week. And so it's still holding 39% cash, but it's got some different exposure really across healthcare, industrials, financial services, and consumer cyclicals. So it's got a handful of positions on right now. And finally kind of coming alive, swinging to the upside here. It's probably going to be rotating out of some of this because it's a short-term swing trading system. But pleased to see it, kind of taking some shots here on the long side and having a pretty good week and a pretty good year now from a relative strength perspective. Our long-term trend following sort of all-weather portfolio here, this is how it's positioned right now. So again, there's a decent cash position, just 29% cash, and then a bonds position, short-term bonds, healthcare, consumer staples, gold, and then a little bit of tech and Bitcoin. So again, pretty defensive, all things considered. This is our all-weather kind of longer-term portfolio. Again, having a hell of a year from a relative strength perspective. And I think both of these systems are basically flat on the year, which is a pretty good win in my book and what they're designed to do for this type of market turmoil, let's call it. All right. So a little bit of a snapshot there in terms of our trading system, some of my thoughts. Hopefully you made it through okay. I think this is a short week. I think this might be Good Friday coming up. If not, it's next week. But might be a short trading week ahead. Double check that. And again, earnings season. So to the extent that they matter this year, double check your holdings, see when they report earnings. And I think that's everything. So hopefully you made it through. Thanks so much for watching. Hopefully this was helpful. Don't forget, we got links in the description of this video for our trading systems, for our sponsor IBD, for TC2000, all kinds of good stuff. You want to work with me, talk with me, we got links for that as well. So have a great weekend. Thanks so much for tuning in. We'll see you back here next Friday.